All right, so we are recording multiple places. So we'll go ahead and start today's webinar. It's election day, and yeah, by all means, it is being recorded, so you can jump out if you want to go and vote. Which I think a lot of people, a couple people already told me that they were doing, and they asked me if I can just double check to make sure I'm recording it. So I am recording, so we should be good. But I think it is important to do these. I'm not going to read the disclaimer because you guys know, not giving out any information here, not any advice. It's for all information, I should say. But I could probably add a couple bullets on here. But I do think it's good to go through every couple of weeks and just kind of, uh, you know, talk about what the market is doing, and then just talk about the best strategy. Because I think what I do over time is just continuously change and kind of tweak my strategy because the market's always different. So you can't do the same strategies that were working months ago in this environment. They're just not going to be the same type of strategies, right? When the VIX was around like a 12 or 13, owning, going long, directionally long trades because option premium was cheap was a strategy that was working pretty well. But the VIX is now, a 20, 21. We're settling in around a 20, it looks like. So those trades are going to be much different. So, and I don't think people realize that when they, from my experience and talking to some traders who use options frequently, I think the difference between an institutional trader and how they learned versus possibly a retail trader is a retail trader learns a couple styles and they continue to do that style regardless of how the market changes. I think an institutional trader, somebody who is like formally trained, will do different strategies depending on what the market is giving them and how the market changes. But I think it's good to go over this stuff now, a bit of strategy, because it just gets your head on right in terms of what the types of positions you're taking, the the structure of the option, also the position size. Everything changes once the VIX goes from where we were at 12 to 20 or 12 to 25. You don't need to be taking the same position size either, because the vol is that much higher. The options are much higher. So if you were really good in a volatility environment where we were around 12, you may not be so good when the volatility moves to a 20 or 25. So that's kind of what the first thing that I have is what do we know, which I always like to say first, because there's always uncertainty in the marketplace. There's never going to be a time where things are where you're going to know. Same thing with looking at the technicals and so forth. I see a lot of people talking about shop and overhead resistance. But there's never going to be a time, once we make that, if we do make that big move, like back above, first of all, the Dow is above the 200-day moving average, but the Qs and SPY haven't reclaimed that. But then you're going to hear people say, oh, now it's the green light to, go ahead and put some risk on. Yeah, I mean, but that doesn't necessarily mean that the market is going to go higher just because we reclaim the 200-day moving average. We could reclaim the 200-day moving average and then we fall right below it again. So I see a lot of people apprehensive after a big pullback. I think it's a great opportunity once you have the correction. It always goes back to oh geez, if the market was a little bit lower, I would redeploy risk. And then once it happens, everybody freezes up. And it's just a natural tendency for us to say, oh geez, the market's gotten really scary. I don't I don't want to go in. But really, like some of the since I've been trading going back before 2000, they're usually, unless you're thinking that the market is going to crash and really we're going to be in a depressed bear market. So again, it depends what your expectations are. But if you don't think that, then this should be just another buying opportunity as long as you're positioning correctly. Right? Does that make sense so far? But I always think that that is kind of a misconception. I know that technical people who are just 100% hooked on technical analysis, they have a tough time in here, and they won't trade. They trade less, and they just think, oh, this is, we're in no man's land. We might be technically, but there's still trades to be done. That's the major indices. There's going to be, what I talk about every night on the videos is that there are opportunities. Not every name is below the 200-day moving average. And hell, if the consumer staples are going to go crazy, then I'm going to go long consumer staples. And I've been doing that, right? We've been doing that the last couple weeks, which has worked really well. But I wouldn't let that scare you to see some people on Twitter kind of like just they're confused or they just don't have the conviction. And there's nothing wrong with waiting. And you see me trading a lot less. Today, for example, I stopped trading basically at 10 o'clock. I made a couple quick swing trades. What's going on here? AbbVie is out with some news, it looks like. Let me just bring up my... But yeah, I mean, I will trade less if I don't have conviction. And you saw me do that a couple weeks ago, for a couple days. I think it's the first time since Tribeca Trade Group has been around where I said, hey, I'm just going to kind of sit and wait. And that was a couple weeks ago when we were really moving down. I kind of just said, hey, let me back off a little bit. But I think, the volatility has been coming in. Right, so we've gone from the VIX was around a 25. We're now, we're definitely still higher than where we were for most of the year, but the VIX is, and it usually does take a while once we have a big of a move from where we were in the VIX. So if we bring up a chart of the VIX, and again, with the VIX, I'm happy to talk about this more, but I still, I don't really get why retail traders are so hooked into the VXX. Basically, there's a good question earlier. So I will talk about volatility and I'll talk about what instruments to use. But please, like, unless you're doing a quick day trade, and I think somebody did one earlier, and that's fine for a day trade, like in and out. But look at this over time. Right, if we go to, I mean, this is what the VXX has done. So I'm confused why I still see people on Twitter and retail traders think that this is like a good gauge of the VIX, or it's not. I don't know, maybe because it's easier to get a quote or because they see volume on it. This is the VIX. Right? This is how the VIX behaves, right? The spikes. Go back to VXX. This is garbage. So yeah, unless you're scalping for like an hour, and I see traders all the time where they're like, oh, the VIX is up this, today, and this is not, the VXX is not the VIX. I mean, this is disgusting. So the reason it never traded at 14,000 or 15,000, they have to keep reverse splitting it down because it just goes down. It just decays over time. So if that's like the only thing that you could take away from the webinar, I have to keep zooming in to make it look right. So I don't get it. I really don't get it why anybody would look at this thing. And it's same thing with the TVIX and the UVXY. This is the worst. These are the worst engineered products ever. Ever. And I just don't get why people pay attention to these things. I don't know. I mean, if you looked at a 10-year chart and you saw Apple at 15,000 and you saw Apple now at $30, or any chart like that. I just doesn't make any sense to me why people use it. So yes, so let me go back to the VIX. I always get sidetracked because I do see people talk about VXX a lot. It just boggles my mind why anybody would trade this thing. But yes, we are still heightened. This is what happened in not September, but January. This was a little bit different because there was a whole blowout with the whole. Speaking of those VIX instruments, the short-term volatility instruments that were being used quite a bit. So we actually hit a 50 here. And, remember, we had this retest in the S&P, which brought the VIX back up to the 20s. So we're doing it in a smaller scale. So the one thing that I'm not really sure why we went down, why the VIX, usually going into events, when there's a big event coming up, just like in an earnings event, usually volatility increases. It did not do it today. I don't know, maybe people are starting to realize that things won't be that affected by the outcome of this election. I don't know. I think people are making more of a bigger deal out of it, but I could be wrong. I could be wrong. It is an unknown. So for tomorrow, I don't know exactly what's going to happen here, but I would think that the VIX drops off more. Unless there's something really people weren't expecting out of the results. But I would think that this continues to fall. Maybe dips, gets decently a little bit further below 20. Any questions? Anybody have any questions about me going off on that rant about VXX or VIX or anything so far? We haven't really gotten into the majority of the material, but still good to review. Indices have overhead resistance. Again, you hear this a lot in financial media. You hear it on CNBC. Sure, there are people who are stuck up here. So why, when people say this overhead resistance, why is this so important? Well, because there's a lot of investors that kind of got stuck here, right? So they've watched this, and if they're still holding, if we come back into here or wherever, they might be inclined to sell now that they got more of their money back. But again, it all depends on the index you look at. If you look at the Dow is doing a great job here, and it's outperforming. We talked about the Dow pre-market today. It's up 70 basis points. So I don't get too bogged down in looking, and again, this is all stuff that you've heard me go on a rant about, but I don't get too sucked into those S&P levels, because how is the Dow doing it then? Right? They're just a function. These indices are just a function of the underlying stocks. So if you're in the right stocks, then you've had some pretty healthy gains over the last 2 weeks. Dow's obviously just 30 stocks. Right? I mean, unless you're trading, if you're trading all NASDAQ stocks, then yes, you have an issue here. But again, you could trade whatever you want. You don't have to just trade the FANG stocks, which are still underperforming. They're barely off the lows, by the way, the FANG stocks. This is the FDN is the Internet ETF, which I do use to kind of judge what the FANG stocks are doing. But they are underperforming. And I don't know how long this is going to last. It's the same thing with all the software names. Even Salesforce, which I view as one of the best in breed in this group, has not been able to get off the mat. One of my favorite companies to trade, or has been one of my favorite companies to trade over the last couple of years, has been Salesforce. But look at the difference between the Dow and Salesforce. It doesn't look nearly as healthy. Okay, so going back to what we know, right? So we could go over charts for like an hour and about different names and about different groups, but I'll come back to some of them as we continue with the couple slides that I've got. But November, so what do we know? So we know that we've had a correction. We've had a decent correction. The market has bounced over the lows. We've got overhead resistance in some places. Some places are still acting fairly poorly as I've gone through. It's really a case-by-case situation. I can come up with reasons for this stuff, why Salesforce, software, FANG haven't performed well. Most of the growth stocks haven't performed well. They've been really over-owned. And when something is over-owned, you don't have any more buyers. Under-owned is value. And right now, value is catching buyers. Right, so I've got this in here. Value, we do know this at this point because we can look at a chart of value versus growth, and we do know that value is outperforming. All right, so if I bring up my customized indices on Bloomberg, which is a nice tool to have. Let's see. I want the large cap value. All right, so here's what a chart looks like. And sure enough, and that's I think why that Dow is doing better than the Qs, because value is outperforming growth. And it's done so pretty decently since the beginning of October. I mean, this really started at the beginning of October, before the overall market started to sell off. Or maybe it was right around the same time. No, a little bit before. Even the Dow made a new high on the 4th, and that's right when the beginning of the month is right when value started to outperform. All right, so we know that is happening. The other couple other things that we know that are happening, and I've missed a bullet here, but I'll go over the first one. November, December is historically a strong time of the year, right? We're already through the weak period of the year. So these are good things to kind of have in the back of your mind. At this point, I don't really want to look for too many short opportunities because it's a historically strong part of the year. Also, we know that the buyback plans will be coming back on. Companies will be buying back shares. So again, I think it's important to wait for some momentum to come back into growth and maybe be a little bit underweight growth until we start to see a little bit of confirmation that buyers are coming back in instead of unwinding. Like right now, I'm still seeing unwinding trades. I talked about that again this morning, just going over the ETF fund flows, which is giving me a real good sense of what's happening. But they said $2.3 billion of tech has been unwound still in the last 5 days, right? So you would think, oh, that happened weeks ago. No, there's still unwinding growth as of yesterday. Now, I don't know if that's still going on, but and I'll be monitoring that every day going forward. They also unwound a growth ETF yesterday, VUG. And there's a bunch of these growth and value ETFs. There's about 5 on each side that I've noticed have been seeing flows. So I think that's important. And so I will be watching that. But at some point, I think they got to be getting close. And that's why I traded the Qs this morning. I do think that they must be getting close to this unwinding of growth trade. And I think once that happens, once this unwind, whoever is doing this unwinding, whatever funds, then things, because right now the correlation, I was reading something on Bloomberg today saying that the correlation amongst NASDAQ names is super high. So why is that? Because they're selling everything right now. And again, I mean, I'm guessing, I don't have a crystal ball and I don't know, but it's just a hunch. They got to be getting close to whatever they're doing, adjusting. When I say they, institutions, but they are definitely have been making some big adjustments over the last couple weeks, and hopefully that'll be done soon. Because I can't see that going on for another couple weeks. I don't have a crystal ball, but I just have a hard time believing that they're going to continue to unwind growth for another couple weeks. Right now, what else are we seeing? We're seeing a lot of fades. Today the market was all over the place. It is election day, so maybe that has something to do with it. But I think if you look at the Qs on the 5-minute bar today, we finished up 0.75%. And again, you don't even have to look at an individual name. You can see it's the whole damn group. I mean, this is much more than normal, right? What happens in a normal day is we do something like this. Maybe we settle in. Even maybe we grind for the rest of the day, but or even this is not that bad, and then we hold. But just seeing this go on, I mean, look at all the volume, by the way, and then right back up. So by the way, we found that support right on the top of value, but this should show you how tricky it is when you've got moves like this, starting flat, going up 0.75%, and then this is, what time did this happen today? 11:40. So over about a half an hour, we just completely melted, gave away all the day's gains. And then what's even crazier is we came all the way back. So again, if you're experienced and very good at day trading, then this is great for you. But I think it's difficult to go in and out of things, and especially if you're holding a few different things, right? Because what happens is, unless you're holding no positions, a lot of the times you're watching some of your positions as this is happening. You're making sure that you've got targets out, or you're making sure you may want to start buying a couple things down in here if you think we're just doing this. But unless you have like little to no positions on, it's difficult to just ignore your positions that you have on and try to capitalize on these moves. Right? It's not easy. And I know people on Twitter act like, oh yeah, because they only will show you their straight up winners. But certainly we've been seeing this a lot of fades. Okay, so that's kind of the state of the market. Yeah, the one thing that I did not have as a bullet is that the buyback plans are back on. Anybody have any questions? I'll keep asking. Anybody have any questions at this point? And then I'll go into, so what I want to talk about next is just some lessons from October, and I'm happy to talk about a couple of trades that did not work for me and where I needed to get a little bit more disciplined. I guess I could add that in here. So let's put that in here. Don't worry, we'll go over each one of these. Spend a couple minutes on each bullet. Discipline. Put a exclamation point. So diversification. So Kramer does this, I think, like once a week on his Mad Money show. Am I diversified? Right. I think one of the things that was very painful for people, for traders, is just as I'm going over growth and value, a lot of people were stuck, were way too positioned in growth. And again, this is with the hindsight 2020 glasses on, but and the thing about it is, it worked for a long time. For most of 2018, growth was where it was at. I didn't really want to be in any consumer staples. I didn't want to be in utilities. And some of the other names, banks for the most part, I didn't really want to be in too much because they just weren't working. But you always want to be careful about if you've got all the same types of names on in the same basket. I've talked about how that's, when I had more positions on than I currently do. Back in 2016, I had at one point 3 or 4 semiconductors on when they were all trending. I've had 3 or 4 different software companies on when they were all trending. I've had, from time to time, a lot of payment processing names like Visa, MasterCard. And I did that a couple times, and you start to look and you're like, oh geez, what if something bad happens in the group and the whole group goes down? So you want to be very careful of that if you're putting too many eggs in the same basket. And I think really that's, listening to just some of people's comments on Twitter and so forth, I saw a lot of people just giving up after we had a correction because that's all that they were used to looking at was growth names. And that's a problem, I think, for a lot of people. If they're only looking at the same names and they're like, oh, all these names, all the charts are broken. Okay, well then, but that's just the growth, that's the FANG names and that's the software names and the semiconductors. And yeah, it's frustrating, but there's other names out there, right? And that's why I go to the difference between the value versus growth right now, that chart, as well as, if you look at DIA versus the Qs, right? And I actually have that chart too. So again, so while I'm bringing up this chart of the diamonds versus the Qs, it doesn't mean go out and buy a bunch of value names. I just want to make sure that I'm making the correct point here. It just means just start to look for some opportunities in other places. And if the chart looks right in those, that's when you go ahead and you attack and put the trade on. Yeah, so diamonds are outperforming the Qs, and this has actually been going on since the summertime. That the Dow has been. Now it's had some pullbacks in here, which is weird looking. So actually, it looks like it's peaked out again. So be careful of that. It looks like this has been going in waves, right? It looks like end of the month of July, the Dow outperformed. I guess middle of the month. And then I kind of lose what I was saying, but it does look like it's moving in a trend at this point. Yeah, so it doesn't mean jump into like a whole bunch of value names. It just means, take a look at what you've got on. And then from a hedging standpoint, right? So if you're long a whole bunch of growth names that are in NASDAQ, and you're hedging with SPY, it's probably not going to work out for you because these indices will perform differently, right? You should be having on, if you're long with the FANG stocks, then probably FDN puts, which I know are tough to trade, or a short position in FDN. The internet ETF is probably your best matchup for hedge, or the Qs, which are obviously liquid. So here's another one. How many positions can I manage? Right? So when the market is trending, back what we saw for 2016, or maybe 2017, I should say, and then this year as well, we've had pockets of really where things have been trending. So I talked about how the semi names, the software names did that for a while. Small cap healthcare did that for the first half of the year pretty decently. That's the PSCH ETF. But really, going back to, option trading, keep in mind that option trading is just that. It's not really investing. So that's really why, looking at how I'm trading now or how I've been trading the last couple of weeks is just to kind of be in and out of things a little bit quicker and not let so many positions just hang on your book. Because if we are met with, again, I don't have a crystal ball, but is it in the cards? And I hope it, I'm positioned more to the long side than anything else. But let's say we do come back and we retest this low to put in, a W pattern like we did back in the beginning of the year. Or if we look at SPY, the pattern will be a little bit more clear on SPY. Right, we kind of had this big retest. It was weird, but it was a retest. Right, so you don't want to get all completely bulled up and put on a whole bunch of positions when you're like, yeah, we're going back to the highs, and this happens. So I call it this, with these option positions, especially like, I've got a couple of December positions on, I think. Those are still short-term options, so you really have to stick and move, right? I've been peeling out of my Honeywell position, a couple other ones. I'm in my last piece of Abbott, but again, I've taken targets. I did that with AMD too, from the lows, Square. and so on and so forth. You could just basically look through the trades that I've been doing on the private Twitter feed. Right? So that's, so I think just, and again, especially when the VIX is higher, right? When the VIX is below 13, you could be a little bit, you could put a little bit more risk on, I think anyway, when the VIX is, settling down and not moving too much, then, or I should say maybe more around 15, the VIX. But when we're around 20, the market is still moving around a lot. It's really difficult to manage a lot of positions. So it's not beneficial, in my opinion. Also, what are their durations? Again, this is where I see, I talk about retail investors. Retail investors love short-term option trading. And I try to help as much as I can in this sense because those are mostly for day trading or for an overnight trade. Swing trading using a short-term option, I don't know, or having a few, like a portfolio on, and I know this happens. I know this happens to traders, is they end up having a portfolio of short-term option trades on. Your outcome of making money, unless the market does something crazy, is the probability is very low. If you have a portfolio on of short-term options, it's damn near impossible to make money in that situation. You've got heavy theta decay, and you need a very fast, aggressive move to get those positions to work. So if you've got a whole bunch of, at this point, November and December options positions on, forget about a big move down and a correction. Just if the market doesn't do anything, you're hosed on your position. So again, I go over this. I did that whole short-term option trading, but I'm telling you, I've seen this time and time again. Over my years of being a moderator or business owner of Tribeca Trade Group, I see a lot of times traders, retail traders who are trading options accumulate short-term option positions. It's not good. It doesn't usually work out to be so people throw around this term 90% of option traders lose money. I never really that's not a saying that I like to say a lot. It's I wouldn't generalize in that sense. But there are reasons like that by holding too many positions, and especially short-term positions, why things are not going to work out. They're just not by doing that, unless you've got your selling premium. So yeah, so let me paraphrase that. And those, and I'm talking about directional plays. If you've got positions on where I know a couple of you guys are doing the calendars on. That's different. Where you're selling premium, or you're not just going directionally long options, but you're actually selling premium. That's a little bit of a different picture, because those, for the most part, when you're selling premium, you want to have positions where the theta decay is the largest. So let me make sure I'm saying that correctly. So here's another one, honoring stops, right? And this goes both in cash positions and option positions. You have to, so I'm going to get, by the way, so the next slide is what to kind of, so these are some lessons. I'll talk about how I didn't honor my stops in a couple places. I had Amazon short put spreads on. They blew all the way through, the lower strike, and Amazon just kept on going down. So same thing with Salesforce. Those are the two biggest losses that I had in October. I wasn't honoring my stops. I just thought Amazon would come back. And there's times when, like we've seen, that they don't come back. At least if you've got a short-term option position on, which is generally how sometimes I like to trade the call spreads, because I'm just looking for a quick move, for a directional move, and I don't want to spend a lot of money. But yeah, that's basically how I got beat up a little bit in October. Two positions on And both of those names just did not come back. They were 2 or 3 week out structures, and I had a little bit, as Amazon usually does recover, I added to those positions. I think I had like one trade was like a $5 wide put spread, which I sold for about 220, and I added to it, sold it for further to collect more premium at $3. And when you sell put spreads and it blows through your strike, then you owe $5, the width of the strike, and that's your capped. But I had a couple trades on where I had a 12 lot on, I think, in Amazon. So the one trade cost me about $6,000. So this is a big thing, honoring the stop. So I'm going to talk about how you can do that a little bit better, best practices on the next slide. So I want to keep rolling because I've now been talking for 45 minutes. Because I try to do a half an hour webinar, but it's really difficult. I just kind of spend a little bit more time. Keep it simple, but keep it methodical. I think I sent it out yesterday in the midday. Just not overthinking things too much, but just making sure that you're being methodical. And I'll talk about that on the next slide. Disciplined, yeah, I mean, honoring your stops so that you don't have. So the reason why you want to be disciplined and you want to honor your stops. Are you placing stops? And I use soft stops. I'll set alerts, and I'll talk about that on the next slide. But yeah, the discipline is if you're doing that and you're being methodical, are you actually following? And then finally, the last one. So again, I just want to keep moving here. But anything that you did in October, if you made a mistake, make sure that you're learning from it. That's the worst thing, to kind of keep going through the same motion over and over, and not taking anything away, because then you'll if you encounter volatility again, which I'm sure in this market we will, don't know when, but I'm sure in months, years to come, you're going to see you're going to see volatility again. Make sure that you figured out what you did wrong, and whether it be any of the names of any of the bullets ahead. Was it the diversification issue? Was it the too much positions, too many quantity of positions, or your position size was too much? Your duration was too small. You did not honor stops. But these are all things, so all of this, the bullets on the above this one, I should say, could be some of your trouble areas. Yeah, those who did not learn from history are bound to repeat it. Absolutely. Yeah, and it doesn't matter what your skill level is. And again, I say this a lot, but you're never going to get to no one ever gets to the point of they figured this game out completely. It's a constant process. And discipline is important. Confidence is good, but not overconfidence. So you have to have confidence to take trades and to see be patient. But overconfidence, when this has happened to me my previous years of trading, where you have a really good couple of months and you get confident. You're like, yeah, I'm a really good trader. And then you get humbled pretty quickly. But I think everybody goes through that, right? They have a good couple of months. It's just like playing golf, too, right? When you have that perfect swing, hit the ball perfectly, and everything works on the swing. You hit the ball, and you're right outside the ball goes right outside the pin. You're like, this game's easy. You're like, why does everybody complain about golf? Look at how I just hit the ball. That was so easy. But we know golf doesn't work that way, right? It's the same thing with golf. You get really good at golf, but it's a constant process. You don't just walk onto the golf course and you know. Right? So a little golf analogy there I threw in. So best practices, be methodical. So what does this mean? I had it on the previous slide. So for me, I'm being very methodical right now, and I'm trying to, because I feel like, I do a lot obviously in the room. I'm trying to call out option activity. I'm trying to be somewhat entertaining. I have horrible jokes, but I'm also managing a portfolio, and sometimes I, will I'll shortcut things a little bit. I also go up tomorrow. I have to go up to Midtown for a Real Vision. I'm doing a piece for Real Vision again tomorrow. So I have to make sure I'm being very methodical with what I'm doing, because I'm juggling a lot of things, right? So that's something that I need to improve on. And I'll give you an example for today, the trade in NTNX, right? I always like to give examples, not just read slides and say, this is what you should do. But the trade in NTNX today. Now, NTNX might work out for the longer term. It actually sold. I actually gave back, went back to my stop price. But putting a trailing stop, making sure. So the beauty about today's order entry systems, E-Trade, Thinkorswim, they all have alerts that you can. With interactive brokers, they all have an alert function. This is, for me, helps my trading a lot, because you don't have to just sit there and watch the damn chart. You could set an alert, which I use as like a soft stop, or so you could continue to kind of ratchet up the trailing stop. And I did that today in NTNX. This way, you're assuring yourself that you're not going to have a losing trade. When something works right off the bat in your favor, and you have a profitable trade. I took a couple targets in NTNX today, and then I put a trailing stop. It hit the trailing stop around, I think, on this, and it never really recovered. And that's it. I'll just move on to the next trade. And that's right now with the VIX around 20, how I want to trade right now. So I'm assuring myself, same thing. So same thing with a bunch of other trades that I have on, like Honeywell is a swing trade I have on right now. That's working pretty well. But I'm not going to let this thing, of course there could always be a gap. But I've got a nice little winner here. I've taken, I think, 2 targets in Honeywell. I put on a call spread for about $1.35, I think. The Honeywell December 150, 155 call spread. And it's marking at 196. So it's gone up, but of course it could go back and retest. But with the December option, I'm not going to sit and wait. If this thing loses the short-term momentum, loses the short-term moving average, do I want to sit in this Honeywell trade if it moves back to 144? No. I'm in a 150, 155 call spread. It'll be so hard to get that trade to work. Right? So as soon as this thing, and that's why I forced the target. Actually, I did not force a target at the end of the day. I was trying to hit one at 210. Or no, 215. I think I hit one at 205 from cost basis 135. That's a great looking trade, right? I mean, that's, if you take the percentage, 135 minus 205 divided by 135, that's a 50. Oh, whoops. That's a 50% profit in like 3 days. That's, I mean, I know. So here's the other thing. One of the misconceptions with option trading. Everybody wants doubles and everybody wants triples. But a 50% profit in what? I think I put this trade on Friday. Today's Tuesday. It's 2 days. That's an awesome trade. 50% profit in 2 days. So yeah, I would like to get it a little bit more. But yeah, I mean, even if I have to take it off tomorrow and it's only a 30% on the last piece, I'm sitting right now, I've got a 6 lot left. I think I had about a 14 lot. I got a 6 lot left on. So yeah, I'm trying to get the last piece to be a big winner, because we do need some big winners to balance out the losing trades, because not every trade is going to work. We know that, right? Not every trade is going to work. So you do need some big winners, but if it's not there, but yeah, I mean, that's where I could see this thing going. I would like maybe one more day and I'll be out. Maybe a move up to the 200. I mean, I do have time on it, and it is a call spread, but I don't want to see this thing go back to lose, come back and retest the bottom of value. Then probably the price will probably go down to like 60 cents. All right, so for now, I've got to monitor it, I've got to be on top of it. And I know it's a psychological thing. Right now, it's marking at $2. It goes down to 170, and it's, oh geez, I just lost 15% of the trade. But we don't know what's going to happen. But if I could take that trade off, if it does move back to 144, if it does move back to 144, and I get out before that happens, and I assure that I don't lose any money on it, then that's perfect. What else? So that's be methodical. So really, I'm making sure that I've got, and that also works with taking targets, right? Making sure that I've got targets out there. Every time I take a target, I put another target out there, and then of course I could adjust. It's kind of a soft target. If I think that the market is going to roll over, yeah, I'll force a target. I'll take my target in from, now I think I had a target out at 215, but yeah, I can always move it, closer. But just being methodical and just every time, where do I have this? It looks like I stopped typing in here. Every time I enter into a trade, oh, here we go. Every trade, right, the next bullet right in front of me. Every time I take a trade, I want to know where I think it's going to go as I'm entering the trade, right? So when I entered this Honeywell trade, I thought it could, looking at the support that it had here, I'm like, this thing has just been pushed down a little bit too far. So I thought, hey, maybe it can push up to the 200, which is kind of what I'm looking at now. I'm still looking at the same thing. 200-day moving average would be great to take this trade off. I don't know if it could return all the way back up through it's a big value area, but if it gets here, maybe if I could ride the last piece out to the point of control, that would be a killer trade. But yeah, all this should be established ahead of time. And from now on, when I send out trade alerts, I'm also putting, for the most part, a stop level, which I think I did put that out in the Honeywell trade. But where do I think it could go? Where is it not going to work? Set a stop alert. Decide this ahead of time. Right? And I think so here's the thing, right? A lot of times we're seeing option activity, and people love to jump in other trading rooms. I've been a part of it. I've been a member of other trading rooms before. But people love they see something on the tape and they jump. And they don't, now that's fine if you're just looking for that like momentum bounce and you're going to be in and out of it in 20 minutes. But I don't do that trading as much anymore unless if I think something could pop, I'm definitely gonna participate in it. And I did that with NTNX today. But for the most part, that's not going to be my normal trading because I want to make sure that I've got a plan, and it's not just some name that's rolling across the tape that's going to be aggressive. I want to have more of a plan. And I think that's part of it's a negative of watching option activity because a lot of times people just jump. They see a big trade or a big block on the tape, and let's face it, a lot of the option activity does not work. And I'm happy to admit that. There's not a lot of people who will say that, but trust me, I've seen all types of good trades. Just what happens is people will talk about it on Twitter, the trade that hit. And if it doesn't work, you never hear a peep out of him about, hey, oh, by the way, that trade didn't work. Nope, they just won't mention it. They'll only talk about the winners or the winning option activity. You don't hear about all the other ones that they mentioned, right? The guys on the halftime show talk about a trade every day, but they never bring up the ones that didn't work. Or maybe once in a while they'll revisit a trade and say, yeah, it didn't work. But I'll tell you, if you go back, and this is with anybody. You could take anybody who regurgitates option activity. And you could also talk about the guys on the halftime show. Go back and if you monitor all those trades that they're pointing out, those trades don't. There's no. I don't want to say there's no edge because I do think there's an edge to finding the trade, finding the idea, going through the process. That's where my edge is, but not just pulling a trade, just taking a trade off of the tape. Because I've never seen anybody do a study and say, yeah, this works, over time. I don't know anybody who's just straight up followed option activity and has winning P&L over the time, good P&L over the time. Okay, so I've talked about taking I have take targets in here. Do not stay married to an opinion, just like we saw with October. If you stayed married to an opinion, to trades, rather than not taking stops, it would affect you really, really poorly. And going back to here, this move happened so quick. It really did on a couple days. So the best thing that I could say is you probably have too many positions on. If the market is going to move as fast as it did in October, and you got a couple days where you got your clock cleaned, I mean, I had an issue the one day because I visited my nephew at school in Pennsylvania, and I drove back, and I'm like, holy cow, what happened? I had too many positions on. Now, that's an outlier. Usually when we step away, I very rarely am away from the screens, but I was away from the screens from 11 o'clock till 3 o'clock, and I come back and the market was down 0.5% when I left, and I came back, it was down 3%. Really bad timing to do that, but I really didn't have a choice. But and again, going back to option trades, that's how fast your whole portfolio could be turned around if you're holding too much risk. So I didn't have this right. And same thing, we already talked about this, when the VIX is over 20 or around 20, you don't need the same size of position in an option as you did when the VIX was at 12. Right? The options are much more expensive. They're going to move faster. Can you use height and vol to your advantage? Yes. And I've been doing that in certain places. You saw me do an iron condor today to take advantage. I think vol comes in a little bit further. But selling premium is a big thing right now. And I'll continue to do that, right? I don't want to sell premium. My strategy when the VIX is around a 12 to 14 is really not to sell too much premium because it's not expensive. Vol is not expensive. But now that it's a 20, absolutely. Right? And you could do that now you want to watch your risk. If you're selling, I never sell puts outright. I always will do it in a put spread. But I've got that Russell trade on, and I've got some. I've been talking about how I've got a couple SPX trades on as well. But yes, there's a whole bunch, and that was a whole separate webinar to kind of go over selling premium. But I did that in a lot of places. That Home Depot trade worked out really well too. Where I said to sell premium. Really, in my opinion, an easier trade when the VIX is around 20, or did that trade when the VIX was 25. So pay attention to new trends. I think I really have a nice edge with that, with picking up on the trends, new trends before the majority of professional traders, to be honest. So I will continue to do that for the room. We talked about this before, seeing option activity on the tape. I think sometimes people jump into option trades just because they see something on the tape. So we saw this a lot today in the energy space. I saw 3 or 4 different energy trades that I was tempted to take. There was an XOP trade. I've just right now, I don't want to just jump into a trade because I see option activity. I want to use a good sense. Use this analogy a lot in trading. You only play the best, like poker, playing poker. Only play the best hands. So it doesn't mean that those energy trades aren't going to work out. We saw range resources. I just have to figure out if I want to take an energy trade right now. And I don't have to do that certainly today, because a lot of times we see trades that hit the tape and 2 days later you can get into the same trade cheaper. Because everybody talks about it on Twitter, and the implied volatility goes up in the trade. 2 days later, it just trickles right out. All right, so we covered a lot. I talked for an hour. Anybody have any questions? I know I've asked that, and I don't see any questions, so it's fine. Like I said, I know people are voting, which as you should. All right, guys. Well, thanks for joining me, and we'll see what the market is doing through the night. My thought is for the election, I hope it's a non-event, and we could just get on with our lives. All right. Thanks for watching, guys. Have a great night, and see you tomorrow.